From the morning reading, according to the CNN Fear and Greed Index, investors have become panicky. Fewer than 1% of all days since 1998 have shown the level of pessimism suggested by the index, and stock returns in the months ahead have been significantly positive. Also, Wednesday's negative price action caused some consternation among traders in the RightX family of mutual funds. The Beta Chase Index collapsed to 0.1, meaning that these traders were at least 9 times more likely to move money into a safe fund than a risky fund. In the past 15 years, this has been matched by only 5 other days, preceding volatile rallies over the next several months each time. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:27 a.m. Central Time, and I'm recording this in preparation for the market day, July the 10th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what we had last night. Actually, it was very bullish. Across all 4 broad market indices, the S&P futures were up 26 points, or 1.27%. Russell, about 1%. NASDAQ about 1.28%, and then the Dow about 1%. You had the crude oil up about 1%, the euro up about 1.75%, bonds down about 1%, and then gold up about 0.25%. China follows its recent rally with another big rally, up 4.5%. I think that's like a 10% rally between the last 2 days. That market is just amazing. Hong Kong up 2%, Japan down about 0.4%, Germany up over 2%. That's significant there. Hong Kong up 1.2%. In terms of macroeconomic reports for today, I don't believe there's anything. Nope, nothing for the United States to speak of. Wholesale inventories, a yellow flag report during the market. In terms of volatility today, short-term VIX 22.06. Obviously, things have been pretty crazy back and forth. We'll look at the chart here in just a second. IV percentiles 56, 56, 54, 75. So pretty much middle of the road with the exception of the Dow, a little bit high. No standard deviation moves were put in yesterday, but we did have one the day before. Count relatively low, only 2 standard deviation type moves in the last 2 trading weeks. So while it seems like we've had a lot of volatility and a lot of movement, a lot of it's gone nowhere. So that's kind of, part of the story here. In fact, let's take a look at this. Before we move on to the regular chart, I did want to show you this. So the S&P, this is market posture, and we're going to talk about the score in just a moment. But notice that we're in a bullish cluster. All 3 of these colored lines here, down here below the 20. And actually, if you look at the index or NASDAQ, same thing, bullish cluster. And also on the Dow, also bullish cluster. On the Russell, it's not a bullish cluster, but it certainly is the cousin to it. It's very, very close, with one line below the 20 and the other 2 not. One of the other 2 is already fired. So anyhow, bottom line is, if you take all this together, you've got 3 of the 4 indices with bullish clusters. Now, that does not guarantee a move up, but certainly probabilities are good that within the next few days that we could have a move up. Now, in the overnight, we've already seen a significant move up, but we've also seen that in recent days, and the question is, does it hold? And of course, we look here at the SPX, so the day cash market only, and we've seen all kinds of whipping back and forth really to achieve nothing. In fact, if we go all the way back, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Our close 9 days ago was 2057. Well, if we go to, where are we right this minute? We are 2066. So with the overnight action right now, we have come back near the high of yesterday, and we're within a few points of where we were at the close of the SPX 9 trading days ago after the big drop. So lots of movement, but really achieved nothing, and for the most part, most of this action has been below the prior range. So this is not a great area to be in. We need confirmed bullish price action to take us back into the prior range, and then ideally to break out of that prior range for this bull to be able to regain its foot. So I showed you the SPX. Let's take a look at the RUT. RUT also, very, very weak. Not good to be down here. Ugly action on the Dow. NASDAQ, very ugly action. Very, very ugly action there. Bonds, while yesterday's action was ugly, bonds actually gave up some of its safe haven status. We question whether gold is really a safe haven anymore, but it was pretty much a no change yesterday. So that's kind of where we are with that. In terms of our regular daily report, still phase 5, the break of diagonal and horizontal support. We have not established a healthy bull phase yet. IBD status remains uptrend under pressure. This has been probably borderline as uptrend under pressure to market and correction. Has barely held on. In fact, I saw a picture from another writer yesterday, basically fingers holding on to the edge of the cliff, and I think that is a very good description of what we've been dealing with lately. Accumulation distribution for the S&P C, NASDAQ a D, obviously not healthy there. GMI index 0 out of 6 with a sell signal since June the 30th. Our stock chart status did not change between yesterday and today. Intermediate term market posture, flip-flop again, back to severely bearish. Of course, we know now that our overnight action is up significantly, so this would seem to bring those scores back into weak bull. But the as of the close yesterday in cash markets, you had the S&P 19.2 and severely bearish, Dow 18.3 and severely bearish, NASDAQ 18 severely bearish, and Russell 18.4 as well severely bearish. Our overall hedge warning status at level 3. Remember, this is because of elevated risk conditions, not some sort of probability that we are going to break down. But certainly the risk conditions are present to allow that to happen with increased probabilities, and we need to be guarded for that. In terms of the special warnings, volatility based, market and decline warning, sharp increase warning are both fired. The VIX is over an 18. The VIX squeeze has fired long. You have distribution day count actually went down by 1 notch. S&P currently at 6, NASDAQ at 5. We have a volatility ratio warning. VIX phase has been climbing. Skew has been okay. The New York Stock Exchange new high, new low actually came back within acceptable limits yesterday. Now, part of this, keep in mind, I mean, the new highs, new lows, I mean, we've had some severe new lows already put in this month, so you have to be even more severe than the prior severe lows to be able to establish new lows again. So this is probably not as healthy as it might look. In terms of the risk aversion indicators, all 5 still solidly at risk off. Nothing there indicating that they're even starting to recover. Option income strategies opinion, VIX is outside the acceptable window, and technically the volatility conditions are not acceptable for new positions. I need to change that. But the even if you're aggressive, you need to consider that we are at hedge risk level 3, so there is very much potential for increasing risk conditions. Covered call strategies. Novice traders should not initiate new positions in this kind of market environment. Aggressive traders should seriously consider a 1-to-1 distribution between in the money and out of the money strikes, and it's pretty close to whether that would flip over to 0 and 2 and actually be with all in the money strikes to ensure a somewhat of an income stream coming from those in the money strikes, and yet at the same time as much downside protection as you can put. Put selling conditions are not acceptable for new core put portfolio positions for novice traders. Aggressive traders can consider the opportunities that are presenting themselves and put on put credit spreads with defined risk, and consider scaling into positions until the market has put in a better confirmed bullish posture. So that should be enough for today. If you find what you're getting from here is helpful, we appreciate you liking us on YouTube or subscribing to the YouTube channel. The same thing with Twitter. Retweet us to your friends, and the like with stock twits. More information is available about what we do each day and how we apply these principles into our trading at the website indicated here. Disclaimers as always. Hit the pause button to review. And we look forward to seeing you back here Monday morning before the market open with our market preview. Good trading.